Shares of Micron are crashing in the after hours. Are you buying the dip? Or in this case, are you catching a falling knife? We'll talk about that on today's show as it relates to when the company announced their Q1 earnings. We got Q1 earnings. We also got a very weak Q2 forecast. We'll talk about that. We'll talk about some of the things that the CEO said in the remarks and what it means for Micron's business. Also, what does this mean for AI? This company is selling its memory chips into the hottest AI companies. Did that business fall apart? And does this have follow through into chip makers like NVIDIA and AMD? We'll take a look at the company financially and give you a good sense of what's going on at Micron. And then obviously we'll look at this technically as well. As during the regular session, most stocks had a massive Fed-induced sell-off. Micron not immune to that, down about 4% in the after hours after reporting rather poor guidance. I'm seeing shares of Micron down nearly 14%. Can you step in and buy the dip? Or again, are you catching a falling knife? We'll answer that question on today's video. What is going on, investors? Hopefully you guys are doing well out there. Micron up about 27% year to date. And look, the stock has performed relatively well as the company is certainly in one of those fields that we all want to be in, artificial intelligence. Its company or its products are finding its way inside of the data centers. And we'll talk about that. That is what is key. Now, we got the company's Q1 earnings. We'll get into them. We'll talk about them. Talk about the gross margins. More importantly, though, we got a Q2 forecast, which is a major brick. Sales are forecasted between $7.7 billion to $8.1 billion in the upcoming quarter. Unfortunately, Wall Street was expecting closer to $9 billion. So this company coming well underneath expectations. In fact, underneath the low-end expectations that Wall Street had set forth for the Q2. So when a company does that, couple of different things it does. We have to reset our expectations into the rest of the year. Probably not going to hit 9.6 in Q3. Probably not going to hit $10.7 billion by the summertime of next year. So all of these expectations have to be priced in. And that is why shares of Micron in the after hours have taken a turn for the worse. Now, is it all lost? What did the CEO have to say about the sales? CEO of Micron said, while consumer-oriented markets are weaker in the near term, we anticipate a return to growth in the second half of our fiscal year. So sometime in the spring and summertime of next year, since this company is on an odd fiscal quarterly system. When a CEO says something like this, and I'm actually seeing this quite a bit when I'm looking through conference calls, CEOs are saying something like, well, we had a bad quarter. Next quarter is not going to be great. But by the back half of next year, it's going to be good. Guys, this is exactly like saying, I'm not going to go to the gym right now. I'm not going to get a six-pack right now and get big and buff. But by the summertime of next year, I'll have that six-pack and I'll be buff. If I were to say that to you, would you believe me? Would you believe by the summertime I would have a six-pack and muscles? You probably would. If I say, I'm not going to eat healthy today, I'm going to keep eating chicken wings and pizza every single day, but by next year, I'm going to be eating salad, I'm going to be the healthiest guy, you probably wouldn't believe me. So when a CEO says this, you can't always believe them. Now, he brings up a good point here, though. He said consumer-oriented. And so what we are seeing is a tale of two different companies. It's the companies that are dealing directly with consumers, the Walmarts, the Nikes, the Lululemons. You look at those company stocks, maybe not Walmart, but Nike, Lululemon, anybody that has a direct relationship with a consumer, those stocks, we can pull up the stock charts if you want, they look absolutely horrible. But if you're dealing with the world's richest companies, the Microsofts, the Googles, the Amazons, these companies are flush with cash. They're not worried about a damn thing. They're trying to grow their business and take market share. Well, those businesses, like the NVIDIAs of the world, the Taiwan Semiconductors, they're absolutely soaring. Micron actually has two different businesses, and we see in compute and networking business unit, that's not you and I buying from them. That's NVIDIA's, that's Microsoft, it's those types of companies. Revenue was in that unit was up 46%. Now represents over half the company's revenue. That's good from a product mix standpoint. Now, when you look at some of the other business units, mobile business was down 19% because they're selling into the end consumer. Embedded business down 10%. Storage business up 3%. So mix of Micron's business, The stuff that's consumer facing, certainly weaker. The stuff that is facing kind of big, rich technology companies, that is absolutely soaring. And it impacts the company's gross margins. 38% in the most recent quarter. Last year, they actually had negative margins. I don't know if it's comparable, but you even look at last quarter, 35% gross margins. So things are actually pretty good financially with Micron. And when we look at this company's revenue in the most recent quarter, $8.7 billion worth of revenue. What I really like what this company is doing, first of all, they've expanded their gross margins. So gross profit, the most recent quarter, $3.4 billion. Last quarter, it was 2.7. We're not even going to look back to last year because it looks like they were dumping inventory. They were doing something weird. But what this company has done very nicely over the last year has really controlled their costs. So you really like to see that. $903 million on R&D last quarter, down to $888. In fact, last year you were at $845. So very much stabilized there. Selling, general, administrative. On higher sales, we were actually able to drop our selling and general administrative from $295 down to $288. So our operating profit, you guessed it, higher gross margins, higher revenue, lower cost. Yeah, our operating income skyrocketed to $2.2 billion last quarter. It was $1.5 billion last year. And this is what some investors, they get a little bit nervous about these memory companies. All of a sudden you get a stacking of inventory and you got to donk this stuff off. Well, you lost $1.1 billion operating the business. So things are looking really good from kind of an operational perspective. Get down to a balance sheet at Micron. It still looks pretty good. We've got plenty of cash. We've got inventory sitting there, but it hasn't ballooned. You don't want to see inventory balloon on a memory company. Then you got to cut prices. Then, your margins go out the door. So looking pretty good there. Long-term debt sitting at about $13.3 billion. That's not really overly concerning. You get down to a cash flow statement, operating cash flows in the most recent quarter, $3.2 billion. Last year was closer to $1.4 billion. Now, this company is expanding, okay? They're getting into these markets, these fast-growing markets. This isn't a software company. That's why you've got to be careful with your allocation to different types of company. As this company scales up, they have to scale up their manufacturing facilities. You get 46% growth in your business unit. Well, guess what? You might have to expand your facilities, as Micron did, by a large amount. Look at this, $3.2 billion. So you had basically no free cash flow over this company. Free cash flow is this operating profit or operating cash flow profit minus your expenditures on property, plant, and equipment. So this company running basically break even. So it didn't allow this company to do a couple of different things. Number one is buy back the stock, which a lot of companies are doing. Also, only marginally paying down the debt. They're still able to afford this dividend. That meant cash burn in the most recent quarter was about $355 million. All things being true about Micron, the Q2 guidance is very much a disappointment. It brings into question all of next year. I don't believe the CEO, just like I don't believe anybody that's eating pizza today is going to change their diet by tomorrow. And so we'll see. The consumer probably will remain weak into next year, but this company is growing their business unit and selling into these companies that are flush with cash. So that should be decent enough for Micron. Now, from a technical perspective, we're not in what I would call a smoking hot buying area, but it is an area where if you felt like accumulating some shares, and again, as an investor, you need to train yourself not to go all in, all out on stocks. If you want to buy shares of Micron here at $90, well, it sure as heck beat the after hours or the closing price of $103, and it sure as heck beats the price back in June when these things were $140. That's why we divide these charts when you have a beautiful upward channel that has been in place since the great financial crisis back in 2009. You divide them in half with this light green line that I'll change to purple so you can clearly see it. You don't want to buy above this line. You want to start accumulating below it. Obviously, the closer you are to the bottom of the channel, the more aggressive you get on a buying opportunity. We're barely halfway down on this one. This is where you sprinkle in a little bit of investment. Make sure you make these decisions up front with Micron. Look at your entire portfolio. If you have a $10,000 portfolio, $100 stock that's impacted by the consumer, does have the tailwind of AI and businesses, Well, I'd probably only want 3 or 4 shares of this one, given they're only going to capture a derivative of revenue that you're going to see from the NVIDIAs, the Broadcoms, the AMDs, the Intels, and certainly the Taiwan Semiconductors of the world. I'd rather be over allocated to those companies in the semiconductor business. As we work further down the stack to a Micron, we better be getting it at the right price. It's certainly approaching that area. Further pullbacks in Micron, I think, could be more aggressively bought. Certainly the after hours drop of shares brings in some opportunity. And if you get continued weakness in this market, which I think you probably will, as we head into Donald Trump's second inauguration, I think you're going to have further weakness in the markets, and it's going to create a lot of buying opportunities. We'll certainly keep you abreast of all of them here on the channel. Make sure you check out the links down below to the newsletter, the social media feeds, and all those types of things. I'd love to see you over there. Hopefully, you guys enjoyed today's video. Back again soon. Good luck with your investments.